For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hey, John.
Hey, how are you?
Hey.
I hear you have a
Awesome.
special presentation for us.
I do. I'll go through it quick because I know this is recorded, so people can go back online and look at the slides with more detail if they want to. All right, so some of my background is I started trading options around 2006, and I found your community, the Locke options community, right around 2012, I think. And I basically started trading the M3 and Bearish Butterfly. I bought those programs. I bought the Rock program too, but I never really traded it live.
Mhm.
I used Option View to backtest and paper trade and things like that. And I always knew that I liked all of these structures, but given I had full-time job of running a restaurant, I eventually graduated towards like a broken wing butterfly kind of structure, which I just felt was easier for me to manage time-wise, and it just fit my schedule and personality better. But I always knew something like the Rock was something more resilient that I would spend more time on when I didn't have the restaurant anymore. So just about a month and a half ago, after 24 years, we closed the restaurant, retired from that business. And that was by choice to spend more time with Wendy and the kids.
Mhm.
But it also gives me some more time to devote to trading. And so I wanted to backtest some shorter term trades. It's interesting because I think Chris and Dan both mentioned kind of focusing on a little bit of a shorter time frame, which I feel like I now do, given that I can devote more time to backtesting and adjusting and all of that. So that kind of got me wanting to backtest some shorter term trades. One of those trades is a calendar, a 9 DT, 16 DT calendar. I just call it Cal 916. And I was introduced to this trade during a successful option trader that Paul, and it just was a good environment to do the trade. But I wanted to go back and backtest it going back to 2017 and just see how it kind of performed. So the trade is basically, I'm doing it on RUT. It's a 10 lot. And I backtested it on ONE from 2017 to pretty much last Wednesday. The trade is on, and at the outset, let me say this is not any kind of strategy recommendation. It's just something I wanted to go back and look at the results of and see how it did. These are just some guidelines that I used to backtest it. So it's
Sure. Yeah, we have to have guidelines for that.
there's subjectivity in the adjustments always and all of that. But so on Wednesdays at 3:30, that's our checkpoint. We're selling the 9 DTE at the money, put or call, and we're buying the corresponding 16 DTE put or call. So it's just a calendar spread at the money. And I was noting the value of the peak of the tent on every single trade. We check the trade daily at a checkpoint at 3:30. The upside adjustments are basically brought us outside the tent. I repositioned the trade to add the money using the same puts or calls, whatever it was. On the downside, if the rut is outside the tent, I repositioned the trade, but I favor positive deltas. I try to favor positive deltas on this trade throughout, just because it's a positive Vega trade. And so on the downside, I'm adjusting it and repositioning the trade about 10 to 15 points above the at the money price at that moment. And then the exit rule is just you exit on the following Wednesday. So enter on a Wednesday, check it once a day, Thursday, Friday, Monday, Tuesday, exit the next Wednesday, and make the adjustments. Trying to keep it as simple as possible.
Sure.
And non-subjective. So, and then rinse and repeat. So when you exit the trade, enter the new one. So what I found was, and these numbers are kind of small, but again, someone can pause the recording and look at them. This was basically the results from 2017 to COVID. There was some success, but then you also lost during the COVID times.
Yeah, short-term
Right.
short-term drawdown. Yep.
And then from then on, the trade pretty much took off right until now. So I was trying to look into what happened in the environment before COVID. I had noted the value of the peaks at entry, and that's what I'm kind of looking for. Is there any edge at entry? So come Wednesday, 3:30, I can do an entry test and figure out, should I take this trade or should I wait?
Sure.
So at entry, I noted the value of the 10th peak. And my assumption was that a higher peak value, which would also mean kind of a wider tent, would result in a higher probability of profit. I made a scatter plot. So I plotted the peak values versus the P&L for all of these. I think there's about 415 trades that I did. So I made a scatter plot along those lines with, so the x-axis here is the peak values, and then the P&L is here on the y-axis. And I'm not great with statistics and things like that, but I looked up some stuff online to find correlations, and there is a clear kind of positive correlation between the peak of the tent and your P&L. I was trying to then figure out what that ideal peak value is that would let us know at entry, whether we could take the trade or not. Again, I don't know any statistical tools to use to figure that out. So I just used Excel and I laid out all the data and tried to kind of look for that value. And what I found was, if you look at all the trades, it's 414 trades. The total P&L is about 214,000. That's after commissions. And what I found is if you took the trades that had an entry peak greater than 12,000, there were 237 trades, 57% of your total trades. But they produced 97% of the total profits. And the trades that were below 12,000, 43% of the trades were 3% of total profits. Again, this is all very preliminary stuff. I'm not suggesting this is it as a trade. Just kind of piqued my mind. So given this study turns out an entry peak value greater than 12 is ideal minimum. So then some of the thoughts and takeaways. This is the last slide. This was just a simple study. From 2017 to COVID, there were 164 trades, and only 11 had peak value greater than 12,000. Right. So what happens when we go back to that environment? Can this trade be adapted to other underlying? This is also a good add-on trade. I've used it along with my M34Us. What about instead of exiting on that Wednesday, if the trade is centered, how about staying an extra day? Lastly, I have purchased your calendar course. I haven't gone through all of it, and I'm looking forward to see what light that sheds on some of these questions and thoughts that I have given this study.
That's awesome, Tano. And again, for those of you who don't know, you've been with us, I don't know how long, for a very long time.
Yeah, I think like 2012.
Yeah, 2012. Yeah. And we appreciate the support. We appreciate you, the contributions you've made. And we've met personally a couple times, and the friendship.